Hello, I'm Russell Poynton. Today I'm delighted to be speaking to Nicholas Cadbury, who is the Chief Financial Officer and Sustainability Officer of International Airlines Group. Thank you for speaking to us today, Nicholas.
Nice to be here.
So we're going to talk about a few things today. Should we start off first with the strategy and the market positioning? So IAG has a number of brands and they all have nice profitability, 20% or so. Can you just talk about what is so attractive about the company and makes that profitability sustainable, and that multi-brand strategy versus, say, the companies that only have one brand?
Yeah, we're quite unique. So International Airlines Group is an owner of airlines. So we've got three parts to our strategy. We're kind of building on our core, and that's the core brands that we own today, which are strong brands. So British Airways, Iberia, Aer Lingus, Vueling, and Level. And the real strength of those is they're really strong brands that are loved by the customer, and they're just focused on three really key markets, and that's the North Atlantic, the South Atlantic, and also across Europe as well. We also fly to the rest of the world, but those are our three real markets where we really play a strong part in connecting customers across the globe overall. So that's really the kind of basis of it as well. We also have a really strong loyalty scheme as well, which underpins those as well, which kind of wraps up the customers into our brands as well. And then we have strong partnerships as well with American Airlines, which helps connect people from America over to Europe, but also with Qatar, which helps connect people from Europe right away across the rest of the world, particularly into the Far East as well. We also have a strong sustainability credential as well, where that's really important, where we're aiming to get 10% of our air kind of fuel as sustainable aviation fuel by 2030. And also we kind of really focus on getting a strong balance sheet as well, which is quite unique in the airline industry as well, which really helps us through any kind of volatilities that might be thrown at us.
Okay, thank you. And so the company's done very well from a profitability perspective over the last 12 months. That, the operating margin is right at the top end of your 12 to 15% margin target. What is structurally different for the group today, and why do you think it's sustainable?
Well, we set a margins of 12 to 15%, and consensus for this year is around about 15%. Last year we were about 13.5%, so we're keeping at the top end of that range at the moment. I think it really shows the strength of our brands and the markets we're in. British Airways is based in London. 65% of our customers come from the southeast of the UK, where you have kind of richer demographics, and they're flying to the richest part of the world, into America. We fly kind of daily or 3 times a day sometimes into 27 different cities in America as well. And that allows you to have a real premium proposition as well. We have about 50% of our seats are premium, which allows you to have a higher yield overall, which allows you to drive kind of higher margins as well. In Iberia, flying from the South Atlantic, across the South Atlantic from South America into Madrid. We call Madrid the new Miami, where you've had a lot of kind of investment from South America into Madrid. And if you go to Madrid today, it's a very, very cool, fashionable place. It's got a lot of South American restaurants, and 15% of people who actually live in Madrid have got a South American background as well. So really a lot of kind of traffic flowing between those two continents for friends and family, but also for business. That's really helping sustain our margins as well. And Aer Lingus, you've got a huge kind of diaspora of kind of Irish people, particularly in the northeast of America, which helps us kind of fly into 14 destinations in America kind of every day, and connecting those kind of diaspora across Europe and the North Atlantic as well. So I think those kind of strong markets help sustain our strong margins, but we're also kind of focused on making sure we're continuously kind of transforming the business as well, particularly focusing on our kind of cost base as well. That's a strong part of the DNA right the way through the business. That all the time we're benchmarking the businesses, all of our businesses. It's one of the strengths of IAG that we've got 5 businesses to benchmark, and making sure we're really driving every single KPI, be it kind of the utilization of our aircraft or the productivity of our crews, or kind of even what's the kind of efficiency of kind of how we would get our crews and our planes at the right time and get our kind of customers into the air on time. We're actually, if you look at our airlines, Iberia is the most punctual airline in the world, and British Airways is actually the third most punctual airline in Europe overall. And that kind of efficiency really helps kind of get your cost base in the right place, which really helps sustain your margins.
Mm-hmm. And economic growth at the moment is not great in quite a few countries. So what would happen, do you think, if the economy that turned down? What protection would you have?
It's a good question, and I think even over the last 2 or 3 years, it's been quite an uncertain economic and geopolitical environment as well. But we still managed to do well, and I think that really kind of plays a lot to the kind of type of customers that we've got. Again, you're dealing with that kind of southeast England into the kind of richest market in the world, into North America, and I think that kind of helps kind of really remove some of the volatility in the kind of economics in the UK, and also in Spain, you're really focused on probably that growing market between South America and Europe as well, which we think will grow at 5 to 6% a year, despite whatever the economics environment is overall. So we think we're kind of, every single company has issues in economic downturn, but we think we're kind of slightly sheltered from that, given our kind of customer profile.
Yeah, and you're targeting something like 2 to 4% organic capacity growth over the medium term, and obviously you're quite selective about where that is. You've mentioned Latin America, but also you're opening up new markets in the US, Nashville, etc.
Yeah.
Can you just talk about how you allocate capital? Do you think about that as things evolve?
Yeah, so I think it's one of the kind of magic sources for IAG. IAG is the holding group. One of the key roles it plays is allocating capital and allocating capacity overall. What we decide at a group level, we decide which markets we want to fly to over the next 30 years, where we think the kind of demand is going to be, where we think there's going to be strong kind of particularly premium demand from our customers as well. We then let the airlines then compete for capital. So we have this range of margins between 12 and 15%. They know they've got to be in there, so they've got to transform their business continuously to make sure they're in that range. Otherwise, they don't get their aircraft, and then they come and kind of bid for planes and aircraft from us to get that kind of capital overall. And that's how we kind of allocate to make sure we're really allocating planes to the best routes for the best for our customers, but also for the best for our margins as well.
Okay. And premium leisure has been very resilient for you. Could you just talk about how you think, how sustainable that is and how you think you can capture more of that?
Yeah. I think our airlines have always been slightly premium, actually. There's a lot of chat about airlines premiumizing. I think we're kind of all got quite a long way there. In British Airways, we've already got 45% of our seats already premium customers, and they have been for a long time. We might take that to kind of 47%, so not much more in incremental movements overall. I think the thing that's really changed over the last kind of 5 years is we used to have kind of quite a significant part of our customers were corporate customers. They still are. But what's happened is through COVID, we've had more customers kind of using Teams, and therefore we've probably got about 70 to 80% of the kind of corporate traffic across the Atlantic that we had pre-pandemic. The big difference is actually the propensity for leisure customers to want to travel and spend more of their disposable income on travel, but particularly on premium travel, has just continued to grow. And if you think about the front of our aircraft, actually it's mainly full of leisure customers at the moment, not just corporate customers. And so we think the corporate customer will start to come back, start to recover over the next kind of 3-5 years. So we've got that kind of benefit still to come our way.
So, Nicholas, let's now talk about the balance sheet and capital allocation, if that's okay. So first of all, the balance sheet is de-geared nicely. By the end of the year, you're looking at 1x net debt to EBITDA. You've completed a 1 billion share buyback. You're paying the dividend. Only talking about M&A potential. TAP, Portugal's mentioned. Can you just talk about how you're balancing all of those things: returns to shareholders, organic investment, potential M&A, and excess returns to shareholders?
Cool. Yeah. So having a strong balance sheet is absolutely fundamental to this business, and I think it's a real core strength of International Airline Group overall. We manage our balance sheet to investment grade, so we're BBB rating by both Moody and S&P, so that really gives us good access to credit in the marketplace as well. For investment grade, you need to keep kind of your leverage below 1.8. Actually, our leverage is at 1x at the moment. We like to keep a headroom to the 1.8, particularly in a kind of cyclical, volatile industry. But we would finish this year at kind of 1x. That's where expectation is. So very strong balance sheet as well. So that's the kind of first bit of our balance sheet, kind of cash allocation. The second thing is really about investing back in the business overall. This year, we'll take delivery of 25 aircraft. Next year, we'll get another 18 aircraft. So it's really making sure we're investing in keeping our customers flying on the best aircraft possibly, both from a kind of comfort, but also from a kind of sustainability and a kind of cost basis as well. We're also investing quite heavily in IT to make sure the kind of building resilience in our IT department, but also actually in the customer-facing kind of applications that we have as well. So keep a strong balance sheet, investing in our customers and our aircraft. And then the last thing is making sure we reward our shareholders as well. We pay a dividend out today of about kind of 2% yield as well, which will kind of increase in line with inflation overall. And then what we've said is that actually we'll distribute excess cash up to about 1.2 leverage overall. So in the last kind of 15 months, we've distributed about 1.3 billion excess cash to our shareholders. That's been through a share buyback. So if we continue keeping our leverage where it is today, actually we'll be able to continue that program into next year and beyond.
Okay. And the question you didn't answer there was about M&A. So what is your appetite for
and then
consolidation?
Coming into A.
Yeah.
One of the reasons we get the kind of 1.2, kind of that low leverage target before distributing excess cash, is that we keep some headroom for things like M&A if they come along. At the moment, there's very little M&A opportunities. There is TAP, the Portuguese airline, which is on the market today. We have shown our interest in that process. TAP is a very kind of interesting strategic opportunity for us. We are very strong flying into Spanish South America, but actually our market share in Brazil, Portuguese speaking South America isn't particularly strong at the moment. So we think there's a real opportunity for being able to recreate what we've done with Iberia, with British Airways, and with Aer Lingus for TAP, and build it on as a kind of really strong hub proposition in Lisbon in the Brazil market. The issue for us, though, is that they're only selling a minority. And as I said earlier, one of the key things for our business is that we can transform the businesses that we can own to make sure that they're in that 12 to 15% margin kind of range performance. Today, TAP is making kind of 7 to 8% margin, so we really need to own it and transform it. Mm-hmm. Because they're only selling a minority, that's quite difficult. So I think it's going to be quite a hard transaction for us to kind of complete. But we'll have a look at it over the next few months.
Okay, thank you. Yeah. So Nicholas, profitability has been very good this year, as we've already discussed. Fuel costs have been helpful, but as have your general control of other costs. So what are the specific initiatives that can help drive unit costs in future to your favour?
Yeah, you're right about fuel. Fuel's been down year on year. Actually, if you look at fuel prices over the last 10 years, actually it's about where it is today, actually. So over the long term, it's about the right place. I think one of the core of the businesses is really about transforming our cost base overall. And that's really hardwired into the kind of DNA of the business. We benchmark every single one of our businesses, every single KPI all the time across the businesses to see where there are opportunities for either investing more in the customer, but also for where there are for reducing costs overall. This year, our costs will increase by around about 3%, so around about just a little bit less than inflation, and that's despite us investing quite significantly in our customers as well, both in our customers, in the proposition on the aircraft, in the seats, in the food that we serve, but also in kind of making sure that our customers get a great experience on the ground as well in our lounges as well. So just into one of the key things is really driving kind of productivity of our assets and of our teams at the moment, and we're really kind of benchmarking across our business to achieve that overall. In the last year, we've actually kind of put a lot of resilience into our fleets, into our crews, to make sure we're taking our customers into the air on time. But on time performance is one of the key KPIs for our business as well. put the investment in. Now what we want to really do is sustain that performance, but start to take those costs out and really kind of drive productivity through our business. We're investing quite significantly in IT. In British Airways, we've got a completely new customer suite of products that are going out in terms of how we manage payments to how we actually manage the customer app. And that'll really help the customer in terms of knowing booking, being able to upgrade, being able to kind of do disruption management as well, which all helps kind of drive kind of fundamental productivity in the business. We also centralize all of our purchasing as well, be it our aircraft, be it our engines, but also kind of the food and the beverages that we fly as well. So continuously we're working with our suppliers about how do we get the best products for our customers, but also at the same time driving our cost base down.
Okay. And as I just said, fuel costs have been helpful. If fuel costs become a bit less helpful, how much more can you dig into the business? And
yeah, so I mean, it's all relative with fuel. So if fuel prices move, they move for everyone in the industry. So we're all in the same position. But our view is that we've had cost prices, our cost base has increased by about 3% this year. Actually, with the transformation, we think we can improve on that next year overall, and then hopefully improve on that the year after. Just all with the self-help things we're doing overall. So we think we're kind of course, we are kind of exposed to fuel prices, but usually those get reflected in kind of revenues and yields as well at the same time. But we think that a lot of the cost base that is under our control and under our really under the kind of transformational program that we can drive ourselves.
Okay. So Nicholas, now we're now going to talk about a bit more short term, the risks, looking forward. So. There was a bit of revenue softness in Q3 in some specific regions. So could you just talk about why you're so confident about the revenue trajectory and which regions you're more concerned about, which ones you're more happy with?
Yeah, so we just had our Q3 results, and actually we had record profits in 2024, and actually we beat those profits again in 2025 again. So there was some weakness in the North America over the last kind of 6 months. But it really is being very specific. Actually, we've seen really strong point of sale from the UK, particularly in our premium customers. And actually the point of sale in America with premium customers has been strong as well. The only weakness we're really seeing is in the economy sector from point of sale in the US flying into the UK. The rest of that has been absolutely fine. And we continue to be very positive about the kind of long term about the North America as well. Again, we're flying from the southeast of the UK, the richest part of the UK, into the richest kind of economy in the world. Traditionally, if you look over the last kind of 20 years, you've seen 2 to 3% growth coming out of North America, and we continue to expect that to come. And if you look at where we're geographically based in both Aer Lingus and British Airways, we're just in the correct place to collect customers from across Europe and push them into America, and collect people from America, collect them back into London, and then distribute them across Europe as well. So we think strategically it's a strong market, and strategically we're in a really good position to kind of continue to drive long-term growth in that market. I'd also just kind of say that actually one of the real strengths of the group is that we've got diversity. So although we're seeing a little bit of weakness on the North Atlantic at the moment, we're seeing real strength across the South Atlantic. I've said Madrid is the new Miami, and we're seeing that kind of friends, family and businesses really growing at about 5 to 6% in terms of the traffic from all those South American countries into Madrid as well. And we expect that kind of strength to continue overall.
Okay. And generally there have been big strides in operational improvements, net promoter scores, on-time performance, which you've talked about. Just talk about how helpful they are in terms of helping the profitability and how much more of this there is to go for.
Hugely. It's been one of the real turnarounds for Iberia. So Iberia, we used to make about 900 million of profit out of Spain in 2019. This year, we should be making including Iberia and Vueling, we'll be making kind of 1.4, 1.6 billion of profit out of Spain overall. A lot of that has been about transformation, and a lot of the transformation has been about kind of that operational performance. we've got about 90% of our customers in Iberia take off absolutely on time and landing, and that is one of the best kind of statistics in the world overall. That means you kind of have less cancellations, you've got better customer satisfaction overall, and it means you're utilizing your aircraft more and your crews more overall. So it kind of benefits everyone, both from the customer, but also your cost base as well. We're now replicating that into British Airways. And as I said earlier, British Airways was the third best performing aircraft carrier in Q3 in Q3 last year as well. So that kind of productivity is really helping to sustain British Airways profits as well.
Okay. And there's a lot of investment in technology and digital transformation. So new online booking for BA, the Starlink, connectivity between the airlines. Can you just talk about how helpful the digital transformation is in taking the business forward and how important it is for you?
Yeah, I mean, we're very excited about digital transformation, and it touches every single part of our business. A lot of the kind of performance improvements we've had from operations has been driven by the way we use data and the way we kind of automate kind of the insight that we get into operational excellence on the airport overall. But we're also kind of transforming our front end as well for our customers as well. So the new app hopefully launches at the end of Q1. We've got about 1,200 of them out in beta testing at the moment, and we're getting very good feedback in terms of the customers, how they're finding the ease of use, but also their ability to book, upgrade, change their flights if they're disrupted, being able to automatically being booked onto new flights as well. So it's a really big step up in customer kind of satisfaction that we're getting from it as well. That drives loyalty, which hopefully then drives revenue, which again I think kind of really helps sustain our business.
Okay. And we have focused quite a lot on airlines so far, but there's another part of your business which is quite important, the loyalty business. So just talk about what you're doing there and how big do you think this could be?
Yeah, we have it's a real pillar of our business, our loyalty business, and the loyalty business is about giving Avios points to our customers. The more they spend, the more they fly with us, the more Avios points they can collect, and they can redeem those for future flights as well. So that's a real big benefit for us, and that encourages people really to link into our brands overall. We also allow some of our partner brands to use that as well. So people like Qatar and Finnair also use those Avios points as well. So you can really get that network across the world linked into our loyalty scheme as well. We also have a strong kind of relationship with some of the credit card holders, so Barclaycard, Chase, but particularly with Amex as well, American Express. And so you can earn points as you spend with American Express. In fact, 1% of the UK GDP gets spent on the British American Express card overall. And you can spend that money, you can then collect Avios points, and then you can redeem those on your flights as well. It's also a profit base for us as well, because we get that profit stream from our credit card partners. And we've also put our holiday business into there as well. And so people can actually go on holidays, they can earn points on their holidays, and they can redeem those on their flights and holidays as well. That business today makes about 500 million euros of profit. It's growing very nicely at about 10% a year. And I think we've got a long way to go in terms of keep on driving that, getting that loyalty, and keep driving it at kind of 10% growth for a long time to come.
So Nicholas, that's been a great overview and insight into IAG. So thank you for the time today.
Good. Thank you very much.